Hey everybody, now that I've got a better mic, I can update my videos. So I'll go over the scan results that I post and give you a broad overview of what each of them mean and sort of how to look at them. All the scans are based around swing trading. It's probably the easiest method that you could learn, and it's by far the most versatile. You can use it in any time frame. You can use it in any market, bearish, bullish, sideways. It's more difficult in sideways markets, but you have to just drop down to smaller time frames and play within the waves. It's doable. It's not the best, but it's a method that if you learn how to use, you can use it anytime, and that's a really strong component to your trading toolkit. Swing trading is based just around trend identification, plotting support and resistance, entering into a trade at support when you have momentum, and selling at resistance. It's pretty simple. It just takes practice and time to get it well and do it right. Okay, so each of the scans I post are sorted by time frame. I do it that way because the conditions that we're looking for are only relevant to that particular time frame. It's important to stay within your time frames because a signal that exists on the 1 hour time frame can be different on a higher time frame. Like, you can be in a 1 hour bullish trend but an 8 hour bearish trend. Like a bullish move on a 1 hour chart could just be a upwards correction of a higher time frame bearish move. Like, you can't get a pullback on like an 8 hour chart without like a bearish trend on the 1 hour, and that doesn't mean that they're both invalid signals. Like, they're both fine relative to their time frame, and you don't want to mix your time frames because you could close out of your position early, or you could get in at the wrong time. Like, you should keep your analysis specific to whichever time frame you're looking at to trade in. And that will keep you in your moves longer or allow you to enter and exit, at the appropriate times. The scan results here, I have them all numbered. We'll go with number 1 first. They're not sorted by priority. It's just they're sorted in the order that they would appear as conditions on the chart. So you can't do anything unless you, number 1, have a bull trend confirmation. The methods that I'm using to identify trend involve 2 moving averages. One is the 8 moving average of the lows and the 10 period moving averages of highs. So what we're looking for is bar patterns above or below the channel. Bull trend is 2 bars above the channel. Bear trend is 2 bars below the channel. The other part of trend is using Williams accumulation and distribution. This indicator is measured against its moving average. So if you have 2 bars above the channel and Williams accumulation is above its moving average, then you have a bullish trend. If you have 2 bars below the moving average channel and Williams is below its moving average, then you have a bearish trend. I know I ran through that really quick, but it's not really important to you on your charts because you can't plot that anyways, because that indicator doesn't exist on stock platforms. It's something that I had to write out myself. But anyways, as long as you have bull trend confirmed or bear trend confirmed, then I use that signal as mostly just a notification. I don't make any trades based off of that. You can, but it's not a signal to trade on its own. one way it could be important is, say you are in a long position, like you're trading to the upside, and that symbol, like say I don't have one on here, but anyways, say I'm in a short position on Tezos and it pops up as bull trend confirmed. I might use that signal here to look at the chart, because I might need to exit my position because price will be moving up after that. So if I'm in a short position, I want to be out of it, so I'm not getting the price coming back on me into a losing position. Another way the bull trend and bear trend confirmed signal could be used is in conjunction with some price action pattern. Like say you have an ascending triangle and the first bar has closed outside of the upper resistance, and that bar also prints as a bull trend confirmed. That could be your signal to enter into a long position to trade the breakout, because you have two different signals confirming the same thing. You have a trend signal also with a breakout, price action based signal. So you can use those together that way, and I'll go into that stuff later in another video. But that's it for the bull trend confirmed signal. The second signal, I don't have any on here, this is horrible, is a bull swing or a bear swing. That's probably the most important signal that I use off of the whole scans. It's the most reliable signal, and it's also the most common signal. What I do when a when a bear swing or a bull swing signal pops up, that symbol automatically goes onto a watch list for me. I'll look at the chart and evaluate where I would consider an entry. What I use for my entry is a combination of dynamic and static supports. Static support being support that won't change, so some historical price level that's acted as support, or dynamic support, which would be something like a moving average or the VPOC in the volume profile, or I don't know what other people use for support, but anyways, it had some sort of moving support. So I would evaluate my position based on a swing, or based on a support, and I'm waiting for price to come down to that support, and that's what the bull swing signal is for. There's no time limit on that. Like, the swing may happen immediately, it may not happen, and that's not invalidating the signal. It's still valid until you have a reversal of the trend. So you could be waiting for forever to get your entry, but when you do have your entry, you will have a highly likely profitable swing. Strong bull. Number 3, the strong bull or strong bear swing signal. That signal is a repeated bull swing or bear swing signal. Like, the conditions have replicated themselves a second time, or a third time, or a fourth time, or a fifth time. Like, there's no limit. Like, after you have the first bull swing or bear swing signal, if it repeats itself again, you will continually have a strong signal. Being a strong signal, some may think that is the better one to trade, but that's not always the case. Usually a strong bull or a strong bear signal exists when price has made an explosive move away from its average price, or an explosive move away from support. And in this case, to have a swing entry on that symbol to retrace all the way back down to a static or dynamic support may be enough downwards momentum to reverse the trend. So you have a lot more risk surrounding strong bull swing signals than you would from a regular bull swing symbol, just because price has moved so far away from your support. In those instances, maybe you'll use a smaller position size or wait for a higher time frame entry. Either one, it just depends. There's just more risk associated with strong bull swings than bear swings, or strong bull swings than just regular bull swing or bear swing, because of that distance that it has to cover with enough momentum, or if it retraces in a short amount of time, it can easily flip the trend and stop you out, and then you're at a loss. So yeah, the next signals, the 1 below, 2 below, 1 above, and 2 above, these are contrarian trade-based signals. For the 1 below and 2 below still bullish, the trend remains bullish, but price has retraced below the 2 moving averages that I talked about earlier. And since the trend still remains bullish, you're expecting a price rebound or a rally back above the moving averages. The 1 above, 2 above still bearish, you're in a bearish trend, but price has rallied above the moving averages, although the trend and accumulation, Williams accumulation, is still bearish. So you're expecting price to fall back down to below the moving averages. Essentially, these would be like 1 bar plays, where if you get that signal, then you enter into like a long or a short position and exit at your first profitable close. Like you don't want to hover around in those positions, because the situation can change quickly. But yeah, that's those. I haven't gone into those very much, because that's really a higher level trading thing, and requires a lot more discretion, but I'll probably go into that at some point in time. So yeah, those are the signals and how to use them. I will go into each of them again individually, and make a video on that. And I hope this has been useful, and I will get the other video out soon.